Hello traders, in this episode we will discuss the concept of imbalance or insufficient in the forex market or even in the stock market or the crypto market, including the role of the smart money. Imbalance occurs when demand and supply of a currency pair are unequal, leading to price volatility. Understanding the factors that cause imbalance, including the economic data, geopolitical events, and market participants, is a key for informed trading decisions. Join us as we explore the impact of imbalance and smart money on the forex market. Happy trading! This episode is brought to you by TradingView, the go-to platform for traders. Experience real-time market data and advanced charting tools. Join millions of traders today. The link is in the description. Thank you guys. So what's going on here is when you look at the candles very closely, there is a gap between some of the candles. So let's mark the high of this candle and the low of this candle here. If you look at it, there is an empty gap that needs to be filled. So this empty gap is called imbalance or insufficient, and smart money traders call it fair value gap. Okay, so basically what's going on here is there's a lot of supply, there's a lot of demand going on here, meaning the market just moved up heavily and left a lot of empty orders, a lot of empty space here, meaning there are orders that are sitting here that needs to be filled, okay, to make the market equal again. And this causes basically unequal price. All right, so what I do is I kind of mark it, so that I know it. Okay, I mark it and I call this imbalance, just simply imbalance. Okay, all right, so because if you look at it, there's an imbalance. This 2 weeks, this week and this week, the high of this week and the low of this week are not touching, and there's always a candle in between. So this means there's an insufficient going on here. All right, so later on what we do is when we go to the chart, what I'm gonna do is I'm gonna mark this entire candle. Okay, this entire candle between the two candles is the candle that causes the insufficient. Okay, so I'm gonna mark the entire candle. All right, here again we have a sell price given us all red, strong momentum to the downside. What's going on here is when you look at the low of this candle and the high of this candle, the shadow here, there's an empty space. Again, this is called insufficient, imbalance, or even fair value gap. It's all the same thing. Nothing is confusing here. I want everybody to understand that this is not confusing. It's all the names that they're given. Some call it fair value gap, some call it imbalance, some call it insufficient, some call it unequal. So it's just a name. Okay, so you just have to understand there's an empty gap between this low and this high here. So what do we call this? We call this insufficient, unequal, imbalance, or even fair value gap. So I'm gonna go ahead and mark it again. All right, imbalance. Okay, so this is what they call an imbalance. Okay, when I go to the real chart, what I'm gonna do is this candle here in between this, there's a candle between these two candles. So this candle here is the candle that caused the insufficient or the imbalance. So I'm gonna mark this entire candle high and low. Okay, just to give me that space. Okay, all right, you can go ahead and take a screenshot of this so that you can practice this later on your own chart. All right, so now that we know how it looks like on the illustration, we're gonna go to the real chart and find out how it looks like on the actual price. All right, so today I'm gonna be looking at what do you call oil, WTI and US. So this is the oil, Texas oil versus USD. So I'm going to use this as a trading. All right, let's say the market here was going up, creating high highs, high lows. Okay, we have here the market creating high highs, high lows. Okay, price here giving us high highs, high lows. So what you notice is we have a change of character here. Okay, somewhere on the higher time frame, the price is hitting on a supply zone, and now the price is reversing to the downside. We're going to talk about this later on in another video. Okay, so now that we have a a change of character here. For those who don't know what change of character is, make sure you go watch my other videos so that you understand what change of character is. It basically means a reversal. Okay, nothing very important here, guys. So if you notice, after the drop here, there was a lot of supply coming in. There was a demand here and creating higher low before the drop here, creating a higher low to higher high. So there was a lot of demand going on here, and then supply took over from this area on, because demand was here and now supply took over. So if you look at it, there's an imbalance going on between the low of this candle and the high of this candle are not touching. So what do you call this? This is what you call unequal, insufficient, imbalance, or even fair value gap. So what I'm gonna do is I'm gonna mark this entire candle. So I can do it two ways. Okay, for me, how I do it is I mark this entire candle that's in the middle between this one and this one. There's this big candle, so I mark this entire candle. Another way you can do it is you can just mark the low of this candle and the high of this candle, just where the imbalance is. You can use it both ways. Okay, so what happens is the price goes all the way down. Okay, the price goes all the way down, creates a little bit of liquidity here, goes back to the imbalance, fill it, meaning the price has to come back to fill the rest of the orders that was sitting here. Okay, that was sitting here. So the price dropped, breaking this structure, created a change of character. Supply took over demand because the demand was here, and the supply took over, left some type of insufficient here or imbalance. The market went back to refill or fill the rest of the orders that was sitting here. So if you look at the momentum of these candles, they're very heavy. Okay, very heavy. Okay, so the price went back to fill this gap. Another thing is, guys, when you're looking for the imbalance or insufficient, you can use any time frame. As long as you know where the higher time frame is heading, you can always use this as a scalping, or even a swing trading, or any type of form of trading. All right, so again here we have another break of structure, candle closing below the structure here. So now here we have higher high led to lower low here. Okay, and then we have a lower high led to lower low. Okay, so what do we have after that? We have a little bit of demand coming from here, going up here, which is the counter trend of this downtrend here. So the market is going up here, so this is called a demand going on here. There's a lot of demand for this currency, and then basically prices started going down, creating a lot of supply, creating a sell-off. So what's going on here is, why did the price came back over here? It's because you can see that this candle low here and this high are not touching. Okay, so this basically causes what they call an insufficient or imbalance. Okay, insufficient or imbalance. What's going on here then? What we do is we mark, like I said, I mark this entire candle, or you can also just mark the wick here and the wick here. And what do we call this? We call this imbalance, insufficient, unequal, or even fair value gap. Do not get confused. Nothing is very confusing here. It's just a name that they given it. Okay, so just relax, take it easy, don't confuse yourself. All right, again we have the market giving us a lower high leading to a lower low here. Okay, leading to lower low here. So what's going on is we have a price taking out this demand, this little demand here going on. Okay, there's a demand here to here, so this demand was taken out, price giving us that break of structure. Okay, price giving us that break of structure, and once we get that break of structure, if you look at it, there's also an insufficient going on here. Okay, let me show you. Okay, give me 1 second. So there's insufficient going on between the high of this candle and the low of this candle. Okay, the high of this candle, I mean the low of this candle and the high of this candle. So let's just mark it, that high right there and that low right there and this high right here. Sorry. All right, so there we have an insufficient. Like I said, for me, I mark this entire candle, but you can also mark this zone here. But if you mark the entire candle, this is why I do it. It makes things very easy, because this entire candle is what caused the unequal or the insufficient in the market. Okay, price is still going down. This is not a valid pullback. If you haven't watched my how a valid pullback looks like, please go ahead and watch my pullback video. That video gives you an entire detailed information of how a valid pullback or invalid pullback looks like. Okay, this is very important. A lot of people think this is a pullback, but it's not. So what we do is, still, if you look at it, there's also it's still, if you look at it, the market is still filled this zone, but I wouldn't count on it. I cannot call this a break of structure, but there is some type of insufficient between here and here. Okay, I'm not going to call this a break of structure, but there is still an imbalance going on here and here, and there's a candle in between, right? So what we do is we mark this entire candle. Okay, we mark this entire candle, and then that gives us our insufficient. Or you can also mark this high and this low, but the price is going to go up anyways, so it's better if you mark the entire candle. All right, again, here we have the price giving us a lower high leading to a lower low. Okay, so once we have that lower high, lower low, what is going on here is we have a break of a structure. Officially, we have a break of a structure here. Once we get this break of a structure, there is an imbalance going on. If you look at here, there is the low of this candle and the high of this candle are not meeting or are not touching. So meaning this big candle here caused an insufficient. This drop here caused an imbalance, meaning there's a lot of orders sitting here. Okay, but what did the market do at this time? Okay, market went up to the extreme high, which is an order block here, but we're going to talk about this later on. Don't worry. Again, this imbalance here was market came back, retest, and then continue to the downside. Okay, continue to the downside. So what happened after that is we continued going down. We continued going down. Market is still dropping. Okay, market is still dropping, guys. So if you look at here, there's a lot of insufficient between the low of this candle and the high of this candle. There is an insufficient going on. If you look at the price, finally came back and refilled it. Okay, but I don't want to go that far. I just want to focus this price going on here. Okay, there's also another insufficient going on between this low and this high. So I just go ahead and mark it. You see the price came back, retested, dropped, and then another opportunity, and then dropped again. Okay, continue dropping, guys, continue dropping. All right, so here we have a valid pullback leading to lower low. We have a lower high leading to lower low, and now we have a price reversing to the upside. Okay, we have a reversal to the upside. So if you look at here, what's going on is the high of this candle and the low of this candle are not touching each other. Okay, there was a lot of supply going on. Demand took over from here on going forward. There was a supply from here to here, and then demand took over, tricking the price to the upside, giving us a reversal. So if you look at here, there's an insufficient or imbalance going on between these candles. What's going on is this big candle that you see caused the unequal or the imbalance. So the price created this insufficient. All right, finally what happens is, if you look at here, price finally came back and filled the rest of the orders that was sitting this zone here. Okay, there was a lot of orders that was sitting in this area, so the price had to come back come back and fill the rest of the orders so that they can continue to the upside. So the guys that are doing this, if you look at it, are the big guys, the institutions, the guys with the money, the big banks, the billionaires, the guys that are making these big moves. If you look at this candle here, there's a lot of money sitting in this just one candle. There's a lot of money, a lot of orders sitting on this candle, almost billions of dollars, because we don't have this much money to move to make this impact in the markets. So this must be the institutions that are doing this, okay? And then for you as a retail trader, you're going to be working with this alongside with the big players, okay? So again, we have another break of a structure here. Okay, we have another break of a structure here. So if you look at it, there is an insufficient here to here, okay, causing that little gap over here. Okay, there was a little supply going on as a counter trend here, and then demand took over, taking out this supply zone. Okay, again we have a low, higher high, higher low. Okay, all right, so now we're gonna go ahead and mark this insufficient. Like I said, I marked the entire candle, okay, just to make sure things are just correct. This entire candle is what caused the insufficient, but you can just mark the, what do you call it, the wicks. Okay, another thing that I forget, guys, is once the price hits your insufficient or imbalance, go to the lower time frame and then look for a change of character or a valid reversal, okay, so that you can continue buying this market. All right, again here we have a price giving us low high. We have a price giving us low high, I mean high low led to higher high. Okay, high low led to higher high. So if you look at here, we have basically a little bit of break of structure here, but the candle did not close below the structure. So this means it was just a liquidity grab or an inducement, and then the price continued to the upside. So there's no insufficient sitting here. There's nothing going on, to be honest. Okay, all right. So now again, all right, low high, I mean high low, higher high. This is not a break of a structure. This is basically a wick out. Okay, so basically, guys, this is it for the day. If you haven't subscribed, please go ahead and subscribe. Make sure you like and share the video. I really appreciate for you, all of you guys who are coming over. Guys, there you have it. Thank you very much for visiting again. If you haven't subscribed, please go ahead and subscribe. Make sure you like and share the video with your friends who are struggling. In this channel, we give a lot of value. Make sure you go ahead and subscribe. Make sure you smash the like button. If you have any question, please put in the comment section. Also, be aware of the scammers. One advice, guys, do not give up. I know this is a very confusing, very complex journey, but trust me 100%, everyone that is day trading, that is very successful, been through the same scenario, the same hardship, but the only thing is they never give up. So failure only comes to you when you give up. So do not give up. If you are if you don't know the market very well, practice on a demo account, or maybe deposit like a little bit of money on your account and then play with that, so that you can get used to how trading looks like before you jump in and put big money in there. Okay, always be careful, stay safe out there, and do not trust anyone that tells you that you're not gonna make it. Just keep trying until you make it. Thank you very much again. Happy trading day, trading week. I hope you guys all enjoy your week profitably. Peace out.